Hello and welcome to another episode of Margin Called, the only channel on YouTube dedicated to controlling your losses in the stock market. In today's video, I wanted to do hopefully a quick trade recap of some trades that I had placed over the past several days. I think the last video that I left on this channel, I was actually going out of town on vacation. I actually ended up placing a few trades while I was on vacation, which turned out pretty well. Unfortunately, when I came back from vacation, I lost my edge a little bit and my discipline as well, I guess. But I did have a pretty good day today. The morning was kind of bloody, but I did manage to get a good grasp of the direction of the overall market, and I jumped back in and ended the day not only green, but I basically wiped out the losses that I had this morning, at least on my options account. So just a quick recap of where we stand in terms of overall performance. I've been dabbling in both options and futures contracts. So since I guess it would be the middle or the late July, I've been playing around with actual money in the futures market. And I think just because of the way that those futures trades are set up, trading strictly based on price action, you don't have any sort of theta or the Greeks in general to have to worry about. So I've actually been doing pretty well in terms of being consistently profitable in that regard. And thankfully, the charts that I put together seem to do a pretty good job of telling me which way the market is going and when those big moves are actually coming. Now, if we just focus on my Webull account, this is the one that I use to trade options. That one has clearly not been doing as well. Interestingly, though, I'm changing up my strategy a little bit. I'm going back to trading SPX options, basically trading the contracts that expire the next day, and I'm trading them out of the money as well. So that is helping me to control risk. It's a little bit easier to manage those trades, especially if you have a little bit of theta on your side, if you already plan on closing the trade before the end of the session. But also, if you are right, those SPX contracts, they basically move 10 times the degree that SPY contracts would. So I can trade maybe 2 or 3 at a time and still make as much money as I would if I was trading 10 SPY contracts at the money with the same expiration. So that's been helping me at least put a floor in my losses on my options trading account. But hopefully, once I get a better grasp of technical analysis and all that good stuff, I might actually be able to do what I did. I guess it was in the middle of the year in June, where not only did I break even, heck, I might even be in the green before the end of the year. So we'll see how that goes. But let me just show you another quick thing just in terms of some of the trades that I've been placing over the past week and a half or so. So this was the week that I was kind of in and out between vacation as well as going back to work. As you can see, the 2 days that I basically had off, I actually started back work on the 15th, but I did manage to find a really good short trade using futures. So I locked in a little over 636 bucks there. But on Monday, I placed 4 different trades. Unfortunately, no single one was a real winner. But I managed to make basically just take a few bites out of the market. And quite frankly, the price action was not as strong as I was hoping it would, especially when compared to, I think, QQQ and SMH. I was expecting a little bit of a stronger move to the upside, but I wasn't getting that consistently with either SPX or the ES E-mini futures. So, but as you can see here on Thursday and Friday was a really bloody day. And unfortunately, I broke my number one, not my number one, but one of my major rules, which is to never ever trade on Fridays. I completely forgot that it was monthly options expiration last week. So there was a lot of volatility in either direction, which really just cut up any sort of positions that I had. I think I only put on one futures trade, but the rest were options trades that really just did not work out as well as I was hoping they would. And unfortunately, even though we had a beautiful, beautiful downside move on Thursday, I totally missed that move because I was misreading the market basically looking too much at what was going on in the futures trading, the futures chart specifically. And I couldn't really get a very good entry point on when I should be able to short the market. So on a day when I could have potentially made thousands of dollars, I ended up losing 184. And quite frankly, that animosity and resentment and anger and frustration probably just bled into the next trading day. Again, today on Monday, the 21st, I didn't originally start out with this $796. I was actually in the hole, at least in my Webull account, close to $400 at one point. But I had a very nice futures trade. I shouldn't say very nice. I probably should have gotten out of it a little bit earlier. But I did have a few, or at least one good options trade that really wiped out my losses from the morning and really helped me stay in the green into the close. So, with that being said, let me just jump over and I'll show you exactly what I was looking at on my futures chart. And to be perfectly honest, ever since looking at futures charts and marking up different support and resistance zones, it's been incredibly helpful for me to really understand what the heck is going on in the market. So much so that I've actually started including aftermarket hours and pre-market hours in all of my regular ETF charts and stuff like that. So it's giving me a much more holistic view of like what's going on in the markets. I'm getting a little bit more accurate readings using my different moving averages, my indicators, all that good stuff. So the trade that I placed this morning, originally I did buy calls on this real sharp spike because I saw that it was that this area was clearly a zone of support. Unfortunately, I was really hoping that it would kind of actually break through this line. If you see on a futures chart, it does kind of look like between Friday and Sunday going into Monday that there was like an inverse head and shoulders type pattern that was taking shape. And this move that I thought was coming turned out to be just kind of like a fake out. But when I realized that that fake out had occurred, I said to myself, well, this is interesting price action consolidation that we have going on here. We basically have a hard break to the downside. This level of support was totally annihilated. And when I saw that price was basically consolidating in this zone using futures contracts, I opened up a position and I basically shorted it when I could. And the risk to reward is actually very good. Unfortunately, I should have closed it when it reached this zone right here. And sure enough, that was a zone that I had previously marked on my charts as an area of support. But I was convincing myself that we were going to go back down here, I think to the 43.50 zone, which would have been a much nicer profit. But nonetheless, as you can see, the market basically made a pretty sharp reversal at this point. Thankfully, I took my stop loss and I dragged it down to a zone where I would make sure that I would just win on the trade either way. So when I realized that this area was basically a very strong area of support, and the market could potentially going up even further, I did manage to find an area at least to try to get into some calls. Let me see here. This is the call that I bought two of these 4420 SPX calls that were expiring tomorrow, August 22nd. And I basically bought them when they were right around here. I think I paid about $260 per contract. Again, it was two contracts. And I went in as soon as I saw that it was basically breaking above VWAP and the 9 EMA was acting as a line of support essentially. I held them as long as I could. I think I closed the position by about 3:15 or so, and so I bought them for $2.60 each, and I sold them for $6.30. So even though that would have been a much nicer profit had I not had any losses, it was still amazing to be able to make a nice decent trade, not have too much downside risk, or at least downside risk that was easily controllable, but at the same time being able to make just a killing on two contracts alone. So this out of the money strategy with the SPX options that expire the next day, it seems to be a really good sweet spot for me to be able to meet my profitability targets. but at the same time, it's much easier to control risk. Something to make a note of, and I think this could be a little bit of an issue going forward, but it does seem that since SPX options, the calls seem to be priced a little bit more aggressively than the puts are. So that's just something I'm going to have to be a little bit careful of, especially as it pertains to things like IV crush. I definitely want to make sure that I don't find myself in a situation where I'm overpaying for any sort of option contracts. But going back to my main chart here, and this is where we'll kind of revisit a little bit of what was going on last week. But again, this was, I think this was Monday. Let me double check my calendar actually. So this was Monday the 14th, I think it was. And I saw, or at least, excuse me, I drew this, I guess you can see a blue wedge shape here. And it's amazing how SPY has basically responded to these different trend lines. And as you'll see, it responded to the bottom trend line going into today's close. But I think this was the 14th, and or I'm sorry, this was the 10th. It's weird. I'm trying to figure out. Oh, this must have been the 14th. Yes, that's exactly what it was. That was probably someplace else where I managed to lose money though. Yeah. So interestingly, we did have a couple of head fakes here with price basically trying to break out of that wedge. But when I saw what was happening into the open on Monday, August 10th, I said to myself, "Oh man, I got to get into some calls. This is going to be amazing." So sure enough, I did manage to make a little bit of money going onto the upside. I put on a futures trade where I made about $200 or so, but yeah, it wasn't really as strong of a move to the upside as I hoped it would. As you can see, the 200 EMA in this instance, we do technically have a pretty strong downtrend at this point, and the 200 EMA, the green line, has been doing a pretty good job of acting as a zone of resistance, so to speak. So even though we did have this nice bounce off the trend line, that was really nothing that the market could withstand. So what really drove me nuts was the fact that I guess Wednesday, I don't think I placed any trades on Wednesday, but it did look like that we had this rejection. This is the 21 EMA, the yellow line. And again, if this is a 30-minute time frame for our example. But in addition to getting rejected off of this moving average line, we did fall under the this bottom trend line of our wedge. So we have a lot of points of contact here. And with that hard break, I was really looking to see how the market was going to react to this. So interestingly, and very similar to what happened here, in the pre-market on, I guess it would be Thursday the 17th, um, the pre-market trading was basically going up and testing this trend line right up here. So we kind of like sneaked up above the yellow exponential moving average. We were caught kind of like in between the 21 and the 50 EMA. So immediately at the open, I remember going straight into puts, thinking that this was going to be a huge flush in the morning and I was going to be able to really cash out. Sure enough, I think I ended up actually breaking even on that on those puts. But what freaked me out was, and maybe freaked out's not the best term, but it did seem that this zone here, I think it's on SPY, it's like that 439 price target. That seemed to be an area where there was the selling had basically just abated. So if you're looking at what was happening after hours on the 16th, we were basically hovering around this area, and on the MACD we have a nice real nice downward sloping underneath the midline. We've got the red histogram. It's very bearish looking, but we really don't have that here. In fact, it's actually a little bit more of a bullish divergence, regular divergence on this chart. So that actually made me turn around, and I think I ended up opening a long position only to be violently stopped out, and here was the actual move. during the basically the actual session, the regular session when the market was open. It was basically making a simple, very basic retracement back to the 21 EMA where it got rejected, and there was this huge downside flush. If I had had a combination of futures short positions as well as SPX puts, I mean, that could have been thousands upon thousands of dollars. So I think going into Friday, that was kind of like the main thing that I had on my mind. We also clearly saw that we're staying away basically from this trend line that was established over the past several days of trading. So I was just hoping for and or expecting some sort of a continuation to that downside. Unfortunately, as you can see here, we've got wicks all over the place on the bottom and on the top, and that's a recipe for disaster for anyone who, even if you're trading futures, options in particular, it can be especially brutal. So I just managed to get chopped up in all different directions on Friday. And again, I totally forgot that this Friday was options expiration. And of course, my rule of never trading on Fridays again. I really got to stop it with that just because of the monthly options expiration. We're going to have quad witching, I think, at some point in September. So I'm really just going to be focusing more so on the other 4 days of the week going forward. That's definitely just a bad time to trade in general. I don't think I've ever really had any kind of killer trades on a Friday anyway. But interestingly, so if we just continue to look at the regular charting on SPY, we had a little bit of funky price action today. I already showed you what was going on with the futures. So there was a little bit of a shorting opportunity going into the open, essentially. And of course, we did get that it found support at this zone. Again, I think it's actually this is a little bit different than what I was pointing at before, but this 435 zone appeared to be something where it was an important area of support. There were buyers there. Unfortunately, I wasn't able to really get in on this when it first happened. I'm still trying to learn the deal on reversals, so until that happens, I'm never really going to be able to cash in very well. But again, as you can see here, price didn't even make it to the 200 EMA on our 30-minute time frame. Instead, it looks like we just continued to get rejected at this blue trend line that I drew. So it'll be really interesting to see what happens tomorrow. I anticipate that we're probably going to continue to see some more movement to the downside. I don't know for sure, but it'll be interesting to see. Unfortunately, I think I'm going to be out of town, actually for, or at least away from my trading desk for the next couple of days. I'm going to have to go travel for business into the office. So I don't think I'm going to have a whole lot of time on the charts in the next couple of days. And unfortunately, I won't be able to show you any loss porn unless I do something really dangerous and try to trade at work. But with that being said, I will try to see if I can maybe get a potential trade in on Thursday. Again, I'm going to be out of town on another little mini vacation towards the end of the month. So it's going to be a little bit sporadic how I place trades, how I update this channel. Hopefully we'll have a little bit more consistency going into September and the autumn months. It'll be really interesting to see how things shake out then, especially with summer out of the way, and hopefully things will slow down a little bit for me at work. But that's it for this episode. Thank you for tuning in. And remember, whatever you do, don't get margin called.